The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And welcome back to Market Talk as we continue our coverage here this week from Corn Congress in Washington, D.C. with the National Corn Growers Association. Of course, a lot of talk here in D.C. amongst farmers about the markets and where prices are at and things like that. Watching weather, of course, and we did see some severe weather impact parts of the Corn Belt here early in the week, and it impacted parts of eastern Iowa into Illinois and northern Indiana. Well, we want to talk about some of that damage and talk markets. It kind of framed up thinking about some of the potential crop loss from that Derecho event. Joining us now for analysis, Garrett Toy with Ag Trader Talk. Garrett, thanks for joining us on the show. And I guess just to start, I'm glad, it sounds like everyone in your area okay, but I know there was some crop damage and building damage and things like that. Can you give us a kind of an overview of what we saw here early in the week?
Yeah, we're pretty lucky, pretty fortunate that at the end of the day that everybody is safe and nobody was hurt. But we had the storm come through. Monday night, I guess it was, and just west of the river. I'm about half hour, 45 minutes east of Dubuque, Iowa, into northwest Illinois, and the Mississippi River, and that Holy Cross area. They saw wind speeds up to 103 mile per hour, and that's the system that came through our place. Ripped some roofs off of buildings, and there's some small EFO, EF1 type tornadoes here, around. But we had essentially what we had was the derecho and the straight line winds. Like I said, no one hurt, but it seemed like it laid the corn over. We were wet. We had a wet spring, and there's, I would say, probably less than 25% of our corn is tasseling at this point. So, the corn that laid over wasn't tasseling. So, there's and we didn't. I did not, from my travels, I didn't see a whole lot of green snap either. So I would think that the corn that laid down will eventually come back. Unfortunately, a lot of structural damage. We still have neighbors that are without power. Had a good friend lose the grain leg to their dryer, and that blew over into all their bins. And just the Mother Nature never ceases to amaze me when I see a 12-inch I-beam just snapped and twisted in half. Mm-hmm. I can't imagine the sound that thing made when she came down. So.
Yeah, well, to your point, again, luckily everyone okay, but definitely, a scary event. Well, and then it's kind of insult to injury when you look at the markets right now, Garrett. I mean, it's been tough to talk because these markets, the grains have been so bearish, funds have been so short here. Corn, beans have lost feels like $1 almost here in the last couple of weeks. I mean, but the one thing I've said to folks, we've seen weather issues here, now in your area, plus we've seen all the flooding, of course, things like that. The unfortunate feeling, I think, right now in the markets, and I've said it this way a couple of times, is that the weather positives are kind of outweighing the weather negatives right now. Does it feel like that's kind of happening in these grain markets?
Absolutely. In fact, my meteorologist flat out said is, wind damage, hail, etc. The USDA takes that into account with their harvested acreage estimates, and the general consensus is that the benefits of the rains seen for everyone else, other than the people that had damage, outweighs the negatives. There used to be an old analyst that used to make the comment about 2 hills, 1 valley. As far as flooding was concerned, is that the two hills that receive the rain outweigh the flooding of the valley that sees the flooding. So I think ultimately, our issues here is I made the comment to my son Saturday. I was mowing yard, and it was for the first time. We got some low-lying areas. It was the first time all year where we haven't had water standing in our yard. And then Saturday night we get 2.5 inches. So it's like you can see it in the cornfields. Is that a lot of unevenness? You can see exactly where the water's sitting, and ultimately I think that's going to come home to roost. But we're not there yet. I think the market. I saw some analysis this week, correlations between November. We have the Republican National Convention going on right now. I saw a correlation chart between presidential nominee Trump's percentage to win versus November's soybeans, and it's a one-for-one correlation. The idea is that President Trump will get elected is more bearish to soybeans because his plan is to introduce 60% to 100% tariffs on Chinese goods to restore U.S. manufacturing, and that's the fear. Now, it all depends on Chinese retaliation. Obviously, I mean they have to buy beans. They're kind of short on their book, and they need to buy it from somewhere. And South America's out, so you would think that they might try to maybe front run some of that here and buy some beans out of the U.S., but that hasn't been the case. But yeah, I mean, there's just a lot of things. Prices are low. We did have a Taiwan tender this morning where U.S. reportedly bought that. That's a good sign that Taiwan's buying U.S. corn. There's only 2 U.S. offers. There was 8 Brazilian offers, and we still won the tender. So that shows us that U.S. is competitive down here, even in the face of Brazilian safrinha harvest. But we're all just looking for this catalyst that causes these funds to cover, and I don't know what that will be just yet.
No, I don't know either. And to that point, it's another function, the market's a function of supply and demand, and we have all of this supply or projected supply. I mean, that could change with harvested acreage later this year, but demand at some point here at some of these price levels, you would think, to your point, that Taiwan tender, stuff like that, you would think we would start to spur up some sort of demand here across the grain complex at some of these price levels, right?
Well, we should, but that's the one thing, Jesse, is that you look at the grand scheme of things. Low price. I hate to say this, but the cure for low prices. Just because we find a level where there's demand doesn't mean we automatically turn around and go higher. A demand market is built over time, and absolutely right. You've got we look at the July WASDE. I mean, the USDA did an about face from the June stocks report. All of a sudden, we've got the lowest carryout to use ratio print of the entire marketing year with some months left in it, and now we're all of a sudden we're 200 million bushel less carrying than what we thought we were going to have. We trim back yield a little bit, we trim back harvested acres a little bit with the flooding that's around. We get that corn carryout under 2 billion bushel versus 2.3 billion bushel. We get in that 1.8, 1.7, 1.9 range. Front end corn doesn't deserve to have a 3 in front of it, So a lot of things can change. It's a process. We get FSA data in September. We'll actually get some yield data in September, and that's when things potentially may bottom.
Well, thinking about this, Garrett, as we kind of wrap up here in this segment, I mean, what would you tell farmers right now as they're looking at their marketing? It's a tough conversation to have. I mean, anyone with old crop left, that's really a tough conversation. New crop, obviously, we got some, options here in front of us, I know. So, I mean, what are you telling folks right now in terms of their marketing?
Well, there's the guys that have held out this long on old crop corn. What we're advising, and I don't know what it goes against, but you've got really nothing to lose. Basis, if anything, if you don't want to spot things across the scale, we have 6 weeks left in the marketing year, and we've had a major sell-off. Basis is strong in a lot of areas, especially in my neck of the woods. I had some corn I locked in on a basis contract. I'm willing to gamble here for the next 6 weeks and see if there is some sort of short covering event. What have I got to lose? Then this is the 2,000-3,000 bushel at the bottom of the bin sort of thing that I'm having to spot over the scales. But the board isn't really attractive to do anything at these levels. We're below cost of production. You got to take what the market gives you. So from a grain producer, we're really not doing anything. From a livestock producer, we're locking in our feed needs because 9 times out of 10 when you can lock in grain under cost of production, you're going to end up ahead of the game. Now for grain producers, what we are paying attention to is our new crop spreads. We have a historically large spec short in corn and soybeans, and we have July spread and November July soybeans trading at historically wide levels. November July bean spread traded 50 cents earlier this week, and we don't trade much wider than that historically. So we're kind of scaling in, locking in our carries, making sure we get our carries locked in, and managing our space in case these spreads should narrow and it pays us the storage that we're going to need to if we do end up having a big crop.
Well, a lot of things to think about, and of course, that risk of trading futures and options can be substantial. But you should talk with your trusted advisors and try to make sure you got a solid plan in place through this environment right now. And with that, Garrett Toy, Ag Trader Talk. Garrett, thanks for joining us here on Market Talk today. Always good to chat with you. Have a great week. We'll talk to you again soon.
Thanks. Talk to you soon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.